Good afternoon, traders and investors. Hope you guys are doing well. It's Will here with another one. So today, big day, guys. We got a lot to talk about. Daily and weekly consolidation is potentially underway. Now, I'm not going to lie, we have been discussing this for a while. We've been expecting this, especially on something like QQQ, as you see pulled up here. So we're going to go through a lot of the major indexes here and a lot of major names. And I want to show you guys what I've been looking at, because today was a bit of an exceptional day to where we did not get any sector rotation whatsoever. If you look at the heat map right here, you can see that the only positive sector on the day was energy. And not only were we red today, as you can see, right, we did have about a minus 1.12 on the SPY, minus 1.3 almost on the QQQs. But for the most part here, all of our major sectors were not only red, but a lot of names were very red. So that's when you kind of have to pay attention. If all of the major sectors are dropping at the same time, it has to flick a little switch in your mind to tell yourself like, okay, this time is different. It's not just an average red day. This is significant. This is the bears making an actual move in the market to potentially do some larger consolidations on the longer time frames, such as the daily and the weekly. So let's get into it one thing at a time here. So SPY, really ugly day, guys. What I was hoping for on the daily time frame here, I was hoping for a slight consolidation into a bear flag. But with the day today, we've kind of cut very deep into this move. So at this point, the bulls need to hold 410 absolutely to keep this daily trend intact. Now, we did break above this resistance area, as you can see, Thursday, Friday, and even yesterday we were holding above, but now we've kind of in one candle shot right back through, and you never want to see that, because if you go one time frame up, this just looks like a breakout with a lack of follow through. And when that happens, guys, it lets you, it has to flick a switch once again in the head. And you have to think that, ooh, okay, well, if bulls are tired, then maybe the most likely expected move becomes something like a further weekly consolidation. And we may have to go back into some accumulation phase, or potentially even pull back slightly further. So what I'm looking out for, guys, the line in the sand level for me is they have to hold 410, or we have to somehow consolidate around here, taper off the speed of this move, because I don't like the speed of this move, guys. That's the one red flag for me today. Or we have to, and then, you know, it's pretty much between this range, right? If we lose 410, we'll have lost the daily uptrend. And at that point, weekly further downside can potentially be in play. But if we hold off and kind of do some accumulation around here, then we really have to see our bulls able to get back above 420 level and push higher. So a lot of this, in my opinion, is going to come down to the debt ceiling. Even though I personally believe that it's a non-factor, the markets are reacting to it. It's kind of like a self-fulfilling prophecy, right? The market is using these headlines in order to complete the price action, right? So basically any negative headlines will lead us towards lower levels, and any positive headlines are going to take us back up to the higher levels here. But, you know, sometimes technical analysis and fundamental analysis, sometimes they go different, sometimes they move in different directions. But now, since there's a lack of negative catalysts in the market, every one catalyst kind of gets amplified. So until we stop talking about the debt ceiling and whatnot, any negative headlines will be amplified, in my opinion. Now looking at the QQQs, like I was saying in yesterday's video, daily consolidation was almost expected at this point. Bulls were getting kind of tired here, and we had a very big move down here. So the level for me at this point to hold this daily uptrend, I would love to see them hold the 12 EMA on the daily and our channel line, right? So this was a rising wedge that did break bullish, but I need to see them hold this level. Obviously, if you want the line in the sand level, for me, that would be roughly around 325 to keep the daily trend intact. You obviously don't want to see something like this and pull back below, because on the weekly, if I were to just leave this drawing here and onto the weekly, right, you could see that that would be a weekly engulfing move. You wouldn't want to see that, because if you go one time frame higher, that means that this month would potentially end in a doji candle. It would look basically like one of these over here, right? And that's really not what you want to see, especially when we've done so much good progress of the monthly MACD and monthly resistance, monthly RSI pushing higher here. You don't want to lose this move. So bulls, in my opinion, if we want to stay healthy, if we want the most likely scenario to just be a daily higher low and for potential to break above, it really needs to stop here. So you can say that the daily trend is intact all the way through 325. But for me personally, if we break down below here, roughly around the 330 level, that's going to raise some real red flags for me, right? And it could very well do it because big names like Apple, Microsoft, Meta, Netflix, they all have, and Google especially, which is top down now, they all have a lot of room to drop, guys. So it wouldn't surprise me here if the markets are due for some larger form consolidation, potentially for a few weeks. Don't want to see it, but if we do start to pull down on these levels, it becomes more likely for me. Moving on to XLF. XLF, again, not a very pretty chart, right? So anything above pretty much 30, let's call it 31.85 here. Anything above 31.85 will just be a daily higher low, but you don't want to see, you can always go on the Fibonacci's, right? In my opinion, whenever the bulls are able to keep 50% of a move, your most likely scenario becomes just a bull flag and potentially move higher. But now, as you see, we're flirting with the 618. So it becomes a point to the deeper that the bears cut into this upswing here, the harder it is for them to just V-shape, right? And the lower they come, your scenario becomes a tightening range. And nobody likes a tightening range because it basically sends us back into this whole choppy no movement territory. So the financials bulls really need to show up in the next few days in a convincing way and retake some of today's move, because this was a very, very ugly move. As you can see, down about 1.16% on the day, but from the high, you know, it's about 1.3, and that's a big day for financials, guys. And they were led by a few stocks like MasterCard. MasterCard actually had its worst day since pretty much the last 6 months. Like if you go here, they put out a little report on it here. Largest percent decrease since November 2022, right? MasterCard usually does not have big red days like this. Like you can see, you can go back to these. This was 2%. This one here was 1%. This one here was almost 2%. You know, you have to go back in time, like they were saying, right? All the way back to pretty much November. This candle right here was 4%. So you have to be really, really careful. This candle essentially, right? As you can see, this 1 day move gave back almost the last 4 weeks of trading. We're now on the weekly time frame, gave back almost the last 4 weeks. Now, at least we do have weekly 12 EMA. On the weekly, we were just looking for a weekly higher low to be set. So the bulls are still in full control, but, you know, a few big red weeks like this, guys, could, you know, set us up for some further consolidation, or potentially even, you know, like a head and shoulders, which would not be good because MasterCard and Visa, they're some of our more defensive names, right? And when you see them put in big red candles like this, it does not inspire confidence. Like, look at the size of these candles, guys, and they're not very pretty at all, right? So this was some of the reasons why financials, you saw it on the heat map right here, right? The banks weren't doing that bad, but it was really the payment processing companies that were down horrendously today. And like that headline said, right, you would be hard pressed to find big red candles like this anywhere in the last roughly 5-6 months at this point, right? Even during the banking crisis, right? During March, it did not get this bad. And there was no real headlines on Visa and MasterCard other than that they were going to reduce their payment processing fees slightly. But in my opinion, a bit of an overreaction here. This, in my opinion, is a technical sell-off to potentially start further weekly consolidation. You could argue now that we are about to lose the weekly trend on Visa. MasterCard is a bit more clear, right? MasterCard has a bit more room, you know, but you really want to hold, like I always say, right, on the fib, you really want to hold, guys. You really want to hold this 50% level if you want that bull trend, weekly bull trend, to remain healthy. That's the more important part. So really going to be looking out for these closely in the next few days. And XLF, you know, XLF, as I was saying, right? So you need to absolutely hold 31.85. In my opinion, bulls need to kind of start reversing this now so that the most likely scenario becomes a potential daily uptrend confirmation, right? If they cut down too much into this move, you'll just end up with a tightening range. So the proof right now is entirely on the bulls. They did a great job here of trying to set up a weekly trend change, but as you can see, it's maybe not working out as well as they wanted to. You may be into some further weekly consolidation here on XLF. Healthcare as well has been absolutely struggling. This was a healthy bear flag. Arguably all the way 4 weeks into this was a healthy bear flag, but now we've lost the moving averages, guys. And you don't want to see that. It's not something that you want to see, right? Bulls are having a hard time. The bulls gave them a really good head start. And look, since then, we have failed to put in a single green week on healthcare. It's just been down, 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 down. As you can see, we're kind of struggling here with support level, previous support around the 130 area right here. And this area really needs to hold, guys. This has been a daily downtrend now for the past 4 weeks, roughly. So what you need to see from the bulls is the bulls eventually will need to put in a big move to the upside to set up a daily trend change. Until they do the daily trend change, guys, this is still going to remain in weekly consolidation. So first things first, you need to see them reverse the daily time frame to know if your bull flag is finished consolidating and you're ready to push to the upside, right? So we really need to watch out here for this 129-ish level, 129.60, to see if that's going to break this week. I mean, we do still have some good room, guys, but just keep in mind, run the Fibonacci's on it if you want to, right? We're now flirting with the 50%. If we go down to the 618, that's kind of like my last level of defense to kind of have bulls start consolidating in the higher areas of this range here, right? If they give back too much, guys, it'll just become a tightening range, and that may take, you know, a few weeks to play out, which is kind of not what you want to see if you're a bull and you want there to be further upside confirmation of a weekly trend change right away. IWM didn't have that bad of a day on a percentage basis, almost down 0.5%, but that's only half the story. If you look top to bottom, since they had a really good start to the day, they're actually down 1.73% from the top of the day. As you can see, they started the morning very, very, very strong, right up until the bears took over the entire market at 12. This was kind of unilateral, right? At around 12 p.m. Eastern, the bears took over most sectors of the market and just didn't look back. So we really need to be careful, guys, on IWM. The bulls did a great job of creating some space here to set up the daily trend change. Now remains to be seen, can the bulls hold enough of this move so that we can confirm a daily uptrend? Still have not confirmed the daily uptrend. This is just a daily move up, but we need to confirm it. I'm all about confirmations. You'll hear me repeating this a lot, right? The last thing you want to see is something like this, to where we double top, fail to break the resistance, right? And then just head back down to the lows of the range and just get stuck in this lower range again. Bulls would hate to see it. I would love to see it because I'm an option seller. You guys know my range. Target range is down here for selling options. So it's fine for me. But if you want the small cap stocks and growth stocks to start going up like we were discussing yesterday, well, that needs to be the case. The bulls need to hold a bit more of this move, in my opinion. Dow Jones names, they have been struggling today, okay? So what I want you to see here is this kind of looks like XLV, right? Kind of slightly looks like XLV, healthcare. So Dow Jones is in the exact same situation. We need the bulls to hold as much of this move as possible. The line in the sand for me remains around 33,000. If we start dipping below 33,000, it's not going to look the best for the bulls. As you can see, we're kind of in this roughly 38 to 40% retracement size here. If we do break 33,000 and head more down to the 32s, in the high 32s, that'll be your 50% and your 618. So really, the line in the sand for me are these levels, right? Anywhere between 32.5 and 32.8 roughly is where you want to see the bulls stop the bears, so that your most likely scenario can just be the confirmation of a new weekly uptrend, something we haven't seen. Keep in mind, this is the potential for an inverse head and shoulders on your value names, but bulls absolutely need to see that level hold. What I want to see if I'm a bull on the Dow Jones is you need to start putting up some nice daily candles and then setting up a trend change. It's all about the trend change, guys. Look, we tried to set a daily trend change, flushed below, couldn't do it. Daily downtrend, right? Even here, tried to set up the trend change. We made a lot of space, but bulls just dropped down to the lows again. Daily downtrend remains, right? So it's just been a case of bulls have not been able to confirm those daily trend changes. And that's what you need to see if you're focusing on the weekly move higher. The daily needs to change first. Now, looking at, I'm going to go through Bitcoin very, very briefly. Bitcoin had a very nice day on crypto today, right? Ethereum up over 2%. A lot of the altcoins putting in some decent numbers here. But I want to focus on Bitcoin because it is our lead current cryptocurrency for the moment here. Daily chart. As you can see, this candle closes in about 20 minutes. We rejected off of the 26 EMA. We're kind of now closing roughly at or slightly on the 12 EMA. What I wanted to see is a net close above. We haven't had a net close above the 12 EMA ever since this drop here early May, and that's unfortunate. So the time frame for me remains the 4-hour on Bitcoin as it has been for the last month. You need to see this 4-hour trend change, right? It's what we were talking about on the Dow Jones and XLV. Same type of move. You need to see the bulls hold this move. They have some good support here at the moving averages. We have some horizontal support coming into play here. You need to see them hold this level and set up a 4-hour trend change. Only then can you look to the daily time frame and say, okay, we have a daily bounce in motion. The bulls need to confirm this 4-hour trend change. We have not had a 4-hour trend change confirmed since all the way back down here, roughly about 10 days ago, right? Where they finally did something in their favor. Well, now we need to gain it back if you guys want to see daily moves off of the bottoms here. So line in the sand levels for me now remain around 26,500. The bulls cannot lose this if they want to have a chance at resuming the move higher. If they do lose 26.5, unfortunately for me, it would mean potentially a move down to our 25,000 level. You can also see this green line representing the 200-day moving average is also down there, coincidentally. So that's really the levels for me, guys. If we can confirm a daily move upwards, we'll then look to set a daily uptrend to be able to move higher. If not, we are looking lower. So I want to go through a lot of names today. We'll go through big tech, and then we'll go through a few names that were notable to me in terms of value stocks that were hit really hard today, which were holding up the market previously, but now may be due for some consolidation, which worries me, okay? So Apple worries me slightly, okay? As you can see, on the weekly, the bulls have been tired now for a while. You can see our RSI is curling down. Our MACD is still healthy, but wants to see, it's trying to top out here. This red box is my resistance area. I haven't removed it because we've never closed above it. It's been in the same place. You can go back to the videos 2-3 weeks back. It's always been in the same place. So we're struggling here with our close to all-time high resistance area that's coming into play from these guys and from before, right? So what we need to see on Apple, bulls need to stop this down move relatively quickly, because at this point, if we lose 170.55, it will be setting us up potentially for a daily downtrend. We have not had a daily downtrend on Apple since pretty much our February into early March consolidation period here, where they successfully set the daily downtrend, right? But if we do lose the daily downtrend, don't be too fearful, one thing at a time, right? So it's okay, just take a deep breath. This is our weekly consolidation move. So like I was saying yesterday, anything above 163, 164 is just a weekly higher low in my opinion. So if for some reason the daily chart continues to come down, we're just looking for a higher low compared to 163-ish, okay? And we have a lot of support down here, right? The bulls do have a lot of support down here. We have our 12 weekly moving average right here at about 165-ish, and we do have our downtrending channel line, which will provide support as well. So we have a bit of confluence down here. So it's going to take a lot of work for the bears to actually get through this area in one clean shot. But the time frame to look out for me at this point for Apple will be the daily as the most important time frame. Need to see when this daily move down stops, and to know when it stops, guys, you need to see the bulls regain a 4-hour trend change. If we go down tomorrow, it's the same concept. wait for potential oversold levels, and then see, can the bulls create enough of a bounce that the most likely move becomes a trend change. Hourly already oversold, so we'll see tomorrow if they can create some space, maybe change the hourly trend, and then we're going to look, can they change the 4-hour trend as well? So one thing at a time, just look for your oversold areas on your lower time frames. Amazon actually held up better than most today. As you guys can see, it barely went negative on the day, up in the post market as well. However, if you look at this candle is not a very bullish candle, right? So top to bottom, we were down at one point, pretty much 2.8% top to bottom of the day. That is a big move on Amazon, right? Especially after a few 1.61% negative days. This was another big move down. So it, perfectly normal in my opinion. We were overbought here on the RSI, as you can see. Big move up. This is just daily consolidation. Anything above 109.18 will just be a daily higher low. We'll see if the moving average can potentially stop this move. If we continue down below, it may be time for weekly consolidation. You'll see, guys, all these charts that I'm going to show you is the same thing. If we lose the daily, if the daily keeps coming lower and lower, we were looking for weekly consolidation. It was the same thing on Apple. So levels for me, the bulls need to break 118.39 for our daily uptrend to continue to be intact. If not, the line in the sand for me on Amazon is 109.33. If you come too close to 109.33, you set up the possibility for a lower high compared to our previous high and a potential flush here. That would be weekly consolidation move on Amazon. So looking forward to see how this plays out. But the bulls are in control of our timeframes. Don't get me wrong here. The bulls are still in control of Apple, right? The bulls are still in control of Amazon and a lot of names that I'll show you. The bulls are still in control, but we're due for weekly consolidation. It's just the way price action works, right? So Google, another egregious example of this in my opinion. So we are still above my little yellow lined area support zone now, which was previously resistance. So we'll see if bulls can hold up here. But what worries me on the weekly is we're so far above the moving averages, right? So for me on the weekly, anything above 105 will just be a weekly higher low. We'll see how far we potentially need to consolidate. But the key here is on the daily for Google, right? Very overbought on the RSI. We were kind of expecting a move down to start occurring. So Google will need to hold forward to maintain the daily uptrend. 116, the 116 level, 116.5 is going to be very important for me. If we come too close to it, we set up the possibility for a daily downtrend, which would then lead us into weekly consolidation. So going to be looking out for that, guys. And what is the key for that? Well, you need to look at the lower time frames. When will our 4-hour be oversold? As you can see, we were so overbought that even this big move down today barely got us to halfway on the RSI. Even on the 1 hour is starting to trend to the downside here. But we're now in a 1-hour downtrend, and it wouldn't surprise me if soon we will be also in a 4-hour downtrend. So I am looking for downside continuation potentially on Google down to this support area here, and we'll see how it reacts. But same situation as most of our other tech names. This is what I was saying on QQQ. We are due for consolidation. It's been too long, guys. It's been too long. We've kind of pushed too hard, too fast. Everything was overbought, right? Microsoft, same situation, right? Very ugly day on Microsoft. You haven't seen an ugly day like this since the day before earnings, pretty much. So very ugly daily engulfing candle. As you can see, it's engulfed the last 3 trading days, which were very bullish. And now Microsoft is starting its daily consolidation. Anything above 307.16 will just be a daily higher low potential, maybe in for some consolidation here at the highs. If we get too close to it, then we may be expecting a daily downtrend, which would lead us into weekly consolidation, which would be warranted. We're very far off our 12 EMA. We are slightly overbought on the weekly, so it wouldn't surprise me if Microsoft does continue its daily and weekly consolidation. However, the bulls, if they want to keep it, they need to break 323, right? But at the moment, my gut feeling is the reason why I'm talking about the downside situations is because I do think that that's potentially what we're going to get as we get closer to the debt ceiling. Anything that states that will be unresolved or whatnot, the bears will make will take advantage of this situation and just put the pressure on the bulls. Meta, same situation again, right? Look at these candles, doji candles, still daily overbought in the RSI. Weekly move does also need a consolidation. We are significantly off our 12 EMA here. We do have some good support. So on the daily, line in the sand level for me now becomes 231. Anything above 231 will just be a daily high or low. We'll see how far down the bears push it. If they do shallow like on the other names, we can expect the bulls to continue. If they get too deep towards these lower levels here, then you set up the possibility for a daily downtrend, which would lead us into a weekly consolidation move, which would be healthy price action, right? Just healthy price action. Everything eventually needs to consolidate. And what I want to say is if tech, because it's such a large weight, guys, if tech does its weekly consolidation move, you need the support of the broader market. All of these other sectors, especially financials and healthcares, and our consumer sectors, need to put in some good work to make up for the tech losses, or your SPY chart, unfortunately, like we're going to potentially start really dropping heavy here on SPY, potentially back down to the 400s. If no sectors cooperate while tech is dropping, if there's no rotation, then we're in for a big potential move down on the SPY as well, right? So really be careful for that and position yourself accordingly, in my opinion, right? Now, Tesla, okay. Tesla, very bad looking candle today. I don't like it at all. We topped up the move, top to bottom, guys. You'll see once again, almost 3.7% top to bottom. That's a very negative day for Tesla. So the bulls were a bit overextended here on the 4-hour time frame on the RSI. You can see we've now cooled it off a little bit, right? So the time frame for me on Tesla is the 4-hour, okay? Anything above 179 is a 4-hour high or low. I need to see the bulls keep this 4-hour trend intact. If not, we are looking for daily consolidation. If they can't do it, this move was an absolutely huge move. If you look to bottom to top, right, this was a 17% move in roughly 6 trading days. That is a huge move even for Tesla. So it wouldn't surprise me now if we are due for potentially some daily consolidation. Wait for these moving averages to come up. We can get some support on them. Support level for me is 180. That's why I have a line there. It represents pretty much the last level of support pretty much for the bulls on the 4-hour time frame, right? And on in terms of the daily, that's this area where I want to see our bulls make a stand. I don't want to see us lose 180 on Tesla. However, you know, they've put in a very good amount of space that the most likely scenario will just be a daily high or low. I highly doubt we do something like this. I could be proven wrong, but I highly doubt we do that. So Tesla, looking for the daily high or low. I'm looking towards the 180s for them to set that. Remains to be seen. Keep an eye on the lower time frames, on the 4-hour time frame. See how it moves, okay? And also keep an eye on when our hourly time frame gets oversold. That's going to be very important. But as you can see, completely lost the hourly uptrend. At this point, the likely scenario becomes an hourly downtrend into potential 4-hour downtrend. Really remains to see what the bulls can do for this. In my opinion, it's going to be very tough for us to regain 193 this week unless we get some very bullish macro moves. The technical price action is leading me to believe that daily consolidation now is underway and expected. Nvidia, same thing. Daily consolidation, right? Anything for me above 282 at this point will just be a daily high or low. Tons of space to work with. Moving averages down here. We also have the extension of our channel trend line here, which was a rising wedge that broke bullish, right? Rising wedge broke bullish. So we have confluence coming back to here, kind of like QQQ, right? So I want to see the bulls hold 300. I really need to see the bulls hold 300. If we cut too much into this move, guys, if you zoom out on the weekly, that'll be a weekly engulfing candle, or potentially with 2 weeks, we'll take back this entire move. You don't want to see that, because then that would potentially mean that our monthly high is set and we may be even going into monthly consolidation, right? So you don't want to see large engulfing moves like this at the end of a month. Keep in mind, we're getting close to the end of the month, so bulls really need to hold this on a lot of names. We don't want to see the monthly highs, right? So this is something that I didn't bring up, but you don't want to see the monthly highs being set like that, because it could lead us into a few months. I'm not going to get ahead of myself, but it could lead us into a few months of potential consolidation on some of these names if they do give up, which is not what you want to see if you hope that the bulls are going to keep grinding higher. So it all remains our daily uptrends, guys, here. We have to keep them, okay? And weekly consolidation cannot get too deep, in my opinion. So the defense, the bulls have to play insane defense here, and we have to get a bit of macro support, or else, our weekly consolidation moves could surprise a lot of people. So be very, very careful about that, okay? Now, a couple names that I wanted to look out for as well that we were talking about previously. PayPal again, okay? Made a very, very good move up. We were about to change the hourly uptrend, but couldn't do it. This was hourly breakout with a lack of follow through. Big area of resistance up here, which is weird because it's not really, I guess you could find some back here, right? Which kind of be the same. But in PayPal at this point, they have taken back a decent amount of this move. If we put the fib on it, right, from the bottom, right, you'll see that the bulls have given up almost 61% of the move, which is not what you want to see. I would have loved for them to cut a bit more shallow for immediate trend confirmation and move higher. But at this point, the line in the sand level for me on PayPal remains 60.65 to keep the 1 hour and 4 hour trend intact here. The proof is on the bulls. We need to hold this. The further we cut down in here, well, unfortunately, the bears will remain in full control of the daily time frame and the weekly time frame as well. Excuse me, you can't see it. The weekly time frame, this would just be a weekly bear flag at the bottom here, which is not what you want to see. I want to see bulls put in a bit more work to the upside here and start recapturing some of these levels so we can get a good enough weekly bounce going that we're trying to set a weekly high or low. But nothing's guaranteed, guys. They have to settle the lower time frame first. If we can't even confirm an hourly trend change, then I'm not looking up to the weekly, right? So most important time frame for me is the hourly. I need to see the bulls confirm an hourly trend change in a convincing fashion. So we need to break 63.30 to the upside, and we need to absolutely hold 60.7, 60.6 to the downside to keep this move somewhat alive for PayPal. Now, we can go over Palantir briefly because I know a lot of people love Palantir. Palantir is extremely overextended now on the upside. I say this, full disclaimer, as a Palantir shareholder. It's now to the point where I'm writing covered calls on my position because I do think that daily consolidation is very, very, very close, especially with the rest of the market potentially consolidating. I highly doubt that Palantir is going to be able to hold their own while the rest of the market consolidates. So what I'm looking for here, guys, will be a potential consolidation here. Anything above 1140 will just be a daily high or low, but as you can see, we're giving back some fairly decent moves here on the day, right? It was up 10%, then it was only up 6.76%, which is still a huge day, but eventually this move will top out and we will be potentially looking for some daily consolidation into maybe weekly consolidation move, right? So I'm looking for Palantir, to hold above these levels, but I wouldn't be surprised if we do come back down into the $10 range for some weekly consolidation over the next few weeks if the market does become bullish. However, if we can somehow continue to push higher, well, I'm looking at $13.42, and then further targets to the upside will then remain $14 to around $15 here. But we are getting relatively overbought here on the lower time frames. So we absolutely need to hold, the bulls need to hold this, need to hold 1140 if you want to keep the daily time frame intact. If we come all the way down here, most likely scenario at that point becomes potentially a daily downtrend for some much needed pullback on Palantir. But now at least we've created so much space that on the weekly, most likely scenario becomes a weekly higher low for finally a significant weekly trend change and potentially as well a confirmed monthly bottom, right? This may be the confirmation, even if we get 1 month or something like this where we move sideways, or if we move higher, do like this, right? Your expected move now becomes this is a potential monthly uptrend shift. So very, very, very bullish on Palantir for the next 6 to 12 months. All that said, now I want to go over some value names that were notable to me. Obviously, you saw the move on Visa, you saw the move on MasterCard, but look at the other ones, guys, and that's what worries me, right? Yesterday, I brought up Pepsi. Pepsi, with the monster move down yesterday of around, or almost about 3% yesterday, which is a very big move for Pepsi. You have to go back, pretty much till January, pretty much till last November as well, to find big moves to the downside, on Pepsi like this. So Pepsi, right, going for the weekly higher low. So as you can see, guys, a lot of the market is going into weekly consolidation, trying to find weekly higher lows after pushing up incredibly much over the last bit of time. McDonald's, same thing. Huge move down yesterday and today on McDonald's, right? You have to go back a long amount of time to find a 2% down day on McDonald's, right? Just going through the candles here. The last one was January, right? So now 5 months, pretty much 4 or 5 months, we haven't had a big move like that. So when it happens, it has to be notable to you. These names, right? Visa, MasterCard, McDonald's, they have lost their daily uptrends. It's confirmed at this point because the most likely scenario will just be a daily higher low after such big moves down. It would be it can always happen. We could V-shape, but for me, the most likely scenario becomes a daily downtrend into further weekly consolidation here over the next potential week. Now, bulls need to stop these moves before they get too aggressive, right? So we have some decent horizontal support levels down here, but they need to stop these moves. Another name, LVMUY, which is Louis Vuitton, right? Louis Vuitton was having look at this chart, right? So even through last year, this chart has been excessively bullish despite all recession concerns, because it's a luxury product and rich people in recessions do not lose money. So this is a company that otherwise, it's like both ends of the spectrum. Dollar stores do really, really well during recessions because people substitute more expensive products and they go shop at dollar stores. And rich people don't substitute their products. They'll still buy the Louis Vuitton bags, right? So it's everybody in the middle that gets squeezed into substituting. So you have the two extremes that usually do good. Luxury products do good in a recession, contrary to most people's belief, and cheap products do well in a recession, right? Louis Vuitton, look at this day, right? Gap down, no news whatsoever on this at all, right? So you would be hard pressed to find a 5%, 6% down day on Louis Vuitton in the last 6, 7, 8, 9 months, right? You can go back, you'll see there are no 6% moves. This was 4% back in February, but 6%, it shows you that there is a larger consolidation move at play here in the markets, which is why I'm getting slightly not nervous, but I'm starting to want to position in a more bearish fashion here for the next couple of weeks, because these are larger moves here. If you look at Hermes, right? If I can find you the ticker here, Hermes International, right? Hermes, same thing, luxury product. As you can see, last year when everything was kind of dying, right? Hermes put in a very, very bullish upswing all through these recession and inflationary fears, right? We've been in a massive, massive monthly upswing like Louis Vuitton. We may be looking to set monthly highs and monthly lower highs may be on the table. So we're looking for weekly consolidation on Hermes. Look at the move today, guys. No news. No news, I'll reiterate. This was done entirely on its own. Price action alone. Look at this candle. Right? Just a very, very, very bearish engulfing candle. And it's like that on a lot of big names. As I've noticed today, it was like that on a lot of big names. Costco, gap down, right? 1.5%. Not a big day, but not something you want to see, right? On a lot of these big names. I mean, I can go through my value list here, which is a list. It's not an exclusive list, but you can see names. The railroads, right? Like, look at the railroads here. Big move down on the railroads. This is Canadian Pacific. It's one of our biggest railroads here in Canada. They just merged with Kansas City pretty much to create kind of like a railroad conglomerate between Canada and the US. Big down day, right, on CP. Look at these value names. You usually don't see, I mean, there's a few like Oracle, right? But you usually don't see these big percentage drops on value. Look at Dollar Tree, right? Same thing. Big move down off the highs here. Dollar Tree, 2.5% almost. Big move down, potentially setting up for weekly consolidation, right? Dollarama is a Canadian one, right? But if we go to DG, which is the other American one, right? You can see that we're now, we were trying to set up for the weekly trend change, but the bears have put in so much work now that, it may not be possible. The best we can expect for at this point is a tightening range potentially, right? So not looking good. I mean, American Express too. American Express was actually the one that was hit the least, but American Express, we're going to be looking for the higher low potentially, but if bulls can't play good enough defense, we're going to be looking towards the lows on some of these names, which would then further a weekly continuation of our now confirmed weekly downtrend, right? So not what you want to see, definitely not what you want to see. So the bulls have their work cut out for them on a lot of these names. Like look at Target, right? Target also flushing the lows today. Past 4 days have not been kind to Target since their earnings, right? If we take a look at Walmart had the brakes applied on it today, but as you can see, the last 3 days since Walmart and Target earnings, they're saying that they're pricing in pretty much the potential for a recession. So that's why we've been seeing a lot of names here drop in a relatively big fashion. Pepsi, like I was saying yesterday, Coca-Cola, right? These big defensive names have been dropping in a big fashion, and it's notable to me, very, very notable to me, right? ASO, just another good example. There's no reason, no news whatsoever, except for this company is looking for a monthly potential higher low, also looking for, at this point, it's just a grind of the weekly uptrend higher. So we're just looking at this point, to set a new base, which would confirm on this a monthly higher low, right? But as you can see, no news on this company. Trust me, guys, their financials are insane. They have a price to earnings ratio of 7. Now, granted, the rest of the industry that they're in doesn't have price to earnings that are that high. As you can see, price to earnings of Dick's Sporting Goods is around 12, let's say, just under 12. And again, this company has been excessively bullish since the COVID recession, but there was no news. Dick's had earnings today. They actually did really, really good on earnings today, but they were not spared, right? Nike as well. Look at Nike. Nike in the past 2 weeks pretty much has dropped 15%, right? And this is Nike. Okay, so this is all, Foot Locker obviously didn't help with their terrible guidance for the remainder of the year off earnings, if you guys didn't see this move, but it is pulling our consumer stocks down. And today we did get some data, right, that the consumer is felt to be weak. So it remains to be seen how much is this recession actually going to affect our consumers, because so far, a lot of these companies, guys, have already priced in a drop in earnings this quarter. They have already started pricing these things in or sandbagging guidance. So it remains to be seen how much, because obviously we won't know until the year is done how much the consumers are actually going to be affected by the recession. But it's a lot to talk about, indeed. We're going to need some macro data. Inflation is going to need to continue coming down. The Fed is going to need to kind of ease itself on interest rates. We can't have them keep on hiking and hiking and hiking. We need to see a pause, and then we need to see the markets kind of price everything in, price in more negative consumer sentiment data and pricing power data, right? And we really need to set our weekly higher lows on a lot of these charts, right? We need to set the weekly higher lows, or potentially if we're going for monthly consolidation, well, we need to potentially set some monthly consolidation underway and then find a relative bottom over the course of the summer here. So I'm still bullish on the markets because we've created so much space, but we are definitely looking out for the next few weeks as to how this is going to play out, guys. So I hope I didn't sound too bearish. I am still cautiously bullish this market. I'm optimistic. I think that the bottoms were indeed either October or December, depending on the stock, right? For most names out there, most profitable names out there, had to add. So I don't think we're going back to the October lows, but I do think that we may find some extended consolidation from a lot of names that have pushed higher now for 3, 4, 5 months in a row. So I hope you guys enjoyed the video. We're going to be monitoring this every day. Every day I'll be updating you with trades as well. I hope you enjoyed it. Consider liking, consider subscribing. Once again, I'm Will. Have a great day. I'll see you tomorrow, and I love you guys.